Welcome back. The markets have been pumping lately, and the portfolio was at all-time highs on October 30th until it dropped today on Halloween at the time of recording this video. Before we get into the video, if you're interested in getting a copy of the spreadsheet for yourself, there's a Patreon link in the description where you can become a member. If you enjoy this type of content and would like to follow along, feel free to like and subscribe to help out the channel. We're nearing the 500 subscriber mark, and it would be awesome to get there before the end of the year. Okay, now let's get into the portfolio review. For transparency, I haven't shown the portfolio in Wealthsimple in a while, so here it is. On the 1-day performance, we're up 0.27%, and then on the 1 week, we're down negative 1.68%. On the 1 month, we're down negative 0.11%. On the 3 month, we're up 7.44%. On the 1 year, we're up 23.47%, and then all time, we're up 31.05%. Now scrolling down, these are the holdings currently in the portfolio. Feel free to pause and take a closer look at these, but I prefer to view all this information in my spreadsheet instead, so that's where we'll head over to now. Starting with the transactions tab, we'll filter for the non-registered account, and these are all the transactions that have happened in the month of October. If we highlight the deposit amount column, we can see that there was a total of $550 deposited into the account, with 99 cents from stock lending. In terms of dividends, there was a total of $959.57 that has been received this month. Then for changes, I ended up selling MSFY and replacing it with MSHE. On the transaction, I actualized a small loss, but I was actually slightly up in the green for the total return when you include the dividends. So I don't mind taking a small loss on here and swapping it over. The main reasons for this change was because of the higher dividend yield, which was 5.83 for MSFY compared to 16.65% with MSHE. The other reason was due to the currency hedging. For MSFY, it was Canadian dollar hedged, whereas MSHE is trading in Canadian dollars but is unhedged. What it means is that if the US dollar strengthens against the Canadian dollar, MSHE will benefit from that difference. And the opposite would be if the Canadian dollar strengthens, then performance of MSHE would be impacted negatively. So if you believe in the long-term performance of the US dollar against the Canadian dollar, it would be better to hold an ETF that is unhedged or non-hedged. Otherwise, on the surface, everything else appears to be the same, where both funds rate up to 50% of the holdings and employs the use of 25% leverage. For the other purchases I made, most of it was into DuraClean Technologies, where I was trying to purchase fractional shares to try and get an even amount. They recently went through a share price consolidation in order to boost their share price to be listed on the New York Stock Exchange, and it was a 3.25 to 1. So that means for every 3.25 shares you owned before the consolidation, it would become just 1 share afterwards. In hindsight, I should have made sure before the consolidation that the resulting share total would be even, but I probably forgot about it. Unfortunately, there isn't enough volume to get the right amount of fractional shares, and I ended up giving up after a few tries. The other purchases I made were in RMAX to continue to build my position, and then the swap into MSHE I mentioned earlier, and I also added a little bit to my bank position. Now on the dashboard, we can see that the portfolio value is currently at $93,318.22. For the total deposits is at $71,343.75. And the lifetime dividends received in the account since inception is at $11,590.61. Now moving on to the summary section at the top, the day P&L is just the price fluctuations from a day-to-day basis, so it's not something I pay too much attention to. But as mentioned at the start of the video, the market tanked hard today, and the portfolio went down $1,547.96. The total P&L is the same as the capital return for the portfolio, which is unrealized, and it is sitting at $7,195.97. Then for the total return, which is a combination of all the realized and unrealized gains in the portfolio, is sitting at $22,085.43. So this would be how much I would have made from this portfolio if I were to sell everything right now. As for the dividend yield, it has remained above my personal goal of 10% because of the rate it would enable the portfolio to compound at. If I use a drop down, I can also change it to see the dividend yield on cost value, which is at 11.69%. Then lastly, the annual dividends has finally passed the $10,000 mark and is at $10,004.57. The next goal, of course, is to get it to $12,000 by next year so that the portfolio will generate $1,000 every month for me to reinvest. Moving on to the charts now, if we look at the portfolio value, we can see that it has all-time highs currently and continues to build a buffer above the total invested amount in the portfolio. Now when looking at the bar chart for comparison since the portfolio's inception, Keep in mind, as I mentioned in previous videos, this comparison isn't something I put a lot of emphasis on, because what this chart is telling us is if I have made a single deposit in the S&P 500 or TSX indexes on the portfolio's inception date, then what is being displayed is the expected return from that one-time purchase. But as investors, we continue to add to the portfolio over time, and thereby increasing our cost basis and lowering the total return percentages. An example of this is if we start with $10,000 and then it grows to $11,000, which would mean that the total return is 10%. If we then invest another $10,000 to make the portfolio value now at $21,000, the total return now is only 5% because you're calculating that $1,000 gain over the larger total investment of $20,000. So what's most important here is to look at this chart a bit more objectively and be more concerned with the portfolio's capital and total return itself based on your own financial goals and how it's growing over time. So if we take the 30.96% in total return from the bar chart and then divide it by the number of months since the portfolio's inception, we get a result of 1.146% a month. Then we multiply that by 12 to figure out how much it would be over the course of a year, and we get 13.76 in total return per year. If the average S&P 500 return per year based on Google is between 8 to 10%, then I'd say the portfolio is doing very well so far. Now moving on to the projected monthly dividends, we're getting really close to hitting the $1,000 mark in October this month, but it won't be until next year where we'll start to hit that $1,000 mark with a bit more regularity. Lastly is the projected portfolio value in 10 years, which we are currently in 2024. From the current numbers shown above, it looks like we're currently on track for the portfolio value and have actually beat the annual dividends target by a good amount. As for the portfolio's sector distribution, almost 1/3 of it is invested in exchange-traded funds, which consists of all the index-based or broadly based ETFs like USCL, HYLD, QQCL, and HTE. Then the next largest, with roughly 1/4 of the portfolio, is in the technology sector, with all my individual tech holdings. The next largest is the financial services sector, with communication services after it. With this bar chart, it gives a visual on how much is invested and how much has been returned to me so far in capital returns and dividend returns. We can see that the sectors with the best return so far has been in the index ETFs and then the individual tech holdings. Then towards the bottom, we can see all the numbers, and aside from the communication services and real estate sectors, everything else has provided positive total returns so far in the portfolio. Now I've already gone through a lot of this much more in depth in the last video, so if you're interested in a more detailed breakdown, watch that video after this. If we now sort the total P&L column, we can see how each holding ranks in terms of the capital return. In first place is GSY, which has been quite consistently near the top. Next is HTE, which has done very well since I picked it up near the fund's inception, and then YAMZ, which has also always been near the top. What's surprising though is to see CPX up this high, because most of the time I spent holding this has mostly been in the red. It wasn't until the last 2 months where we saw it come back and surge upwards to where it is now. I won't go over the others in the middle here, and just briefly talk about those at the bottom, which have consistently been both the telecoms and Tesla. Tesla I'm not worried about, and technically I'm positive on this position if we look at the total return when dividends are included. The 2 telecoms are unfortunately the last ones in the portfolio that I've yet to see a recovery. If we look at it with total returns, it doesn't look as bad, but I'm definitely looking for a good opportunity to get out of these and to use the capital elsewhere. Next, if we sort it by annual dividends, the largest payers in the portfolio are YTSL, HYLD, and USCL. All of these pay over $100 a month, and I'd like to have a few more of these holdings over time to pass this threshold as well. Next, if we sort by the dividend yield, the highest yielding ones are YTSL, ENCL, and Bank, which are all very popular and favorites among passive income investors. Over time, I'll likely get out of some of the lower yielding stocks and move them towards some of the higher yielding ones eventually. Then if we sort the lifetime dividends column, we can see in order from highest to lowest the amount of dividends I've collected from each holding since owning it. Again, YTSL is at the top with over $2,000 collected since owning it, and then followed closely by HYLD. USCL, which I had purchased 11 months ago and have been actively growing this past year, is now in 3rd place. Now sorting by the total return column, this is the most important column I'm focused on, and here we see that GSY has returned 2/3 or 66% of my initial investment back to me so far. Next is YAMZ and ACT with over 50% return, followed by a few in the 40% in YGOG, CPX, and HTAE. In terms of the ones in the red, MSHE and RMAX are both fairly recent purchases, so they are slightly down, but as shown earlier, the biggest losers are both the telecoms. Lastly, we can sort by the percentage weighting within the portfolio. Here again are the same 3 core holdings near the top in USCL, YTSL, and HYLD, all making up roughly 10% each of the portfolio. The rest of the holdings are all fairly close to each other, so things are fairly balanced overall. These first 3 charts are either the same as the ones on the dashboard tab, or we've already talked about it, so we'll move down to the others. For the stock price return performance chart, we can see most of these are in the green, and then the few in the red are the ones which you can possibly look at as potential purchasing opportunities to lower averages. Of course, you shouldn't be basing your investment decisions solely based on this, and to make sure to do your own due diligence to understand why the stock might be in the red. Then looking at the dividend yield chart, we can see a lot of these are in the red, which makes sense because of the bull market we've been in this year. So because of that, as the stock price goes up, the dividend yield will go down because they're inversely related to each other. So the ones in the red are indicating that the stock is currently trading at a premium, then the ones that are in the green are the ones which could be potential buying opportunities. Again, this is just an indicator, and you shouldn't be basing your investment decisions solely based on this, but it's just another piece of information. Moving on, we have the current price and the 52-week range chart. In terms of purchasing opportunities, it looks like ATD, BCE, ENCL, RMAX, and TELUS are nearest to their 52-week lows currently. MSHE is also near its lows, but that's a bit inaccurate to say because this is a brand new fund that was launched only last month. For 52-week highs, it looks like Bank, BTCY.B, CPX, ENB, HYLD, QQCL, and USCL are all at or near their 52-week highs, so it might be worth considering waiting for a pullback before purchasing more into these, or taking the opportunity to lock in profits. Then for this next chart, it's a visualization of the capital returns versus the dividend return of each holding. So looking at this, the highest total return stocks are HYLD, YTSL, and HTAE, which have all returned over the $2,000 mark so far in terms of capital and dividends. In terms of just looking at capital return, the highest ones are GSY, HTAE, and YAMZ. I think it's worth pointing out that based on the bar sizes, that for both HTAE and YAMZ have proven to be much more of a growth investment, more so than a dividend investment so far, despite both of them being covered call ETFs. Then for dividend returns, we can see that YTSL is in the lead, with HYLD behind it, and then USCL and HTAE. For those with negative capital return, YTSL and TD appear to be the only ones where the dividend return covers the loss in capital. The others will just have to wait for them to recover, or for the dividend returns to outpace the capital return. Now in the last few charts, this is showing the projected timeline to reach 100k invested in the portfolio. This was originally supposed to be a 4-year plan, but as you can see by the gold line, we've actually been investing more than the projected amount and should hit the target early next year. The next two charts are part of the milestones tab, where we set some goals to hit each year. For 2024, we've already hit our goal of $9,000 in annual dividends, so it's now working towards next year's goal of $12,000 in annual dividends. We've just recently passed the $10,000 mark, so that just leaves $2,000 left to go. As for the portfolio investment goal, it was set to $100,000 this year, but this won't be one we can hit, so hopefully we can get to it sometime next year. Finally, we just have a duplicate chart of the one already on the dashboard, but it's repeated here again but a bit larger so we can see it more clearly. I just want to mention again that if you're interested in getting a copy of the spreadsheet for yourself, there's a Patreon link in the description where you can become a member. There's currently a special offer for the next 2 weeks, where the first 50 people who are early birds to join will get a discounted 1-month trial for just $2 before deciding to move to a paid tier of their choice. And as an added bonus thank you for being part of the initial launch, you can also be upgraded to the next tier above at no extra cost for the lifetime of your subscription once the 1-month trial ends. I put a lot of effort into making the entire spreadsheet as user-friendly as possible and as easy to set up for beginners. These spreadsheets have been built primarily for dividend investors first and foremost, but can also work just as well for those who invest primarily in growth, and who may someday eventually transition into dividend stocks for retirement. The greatest thing that attracted me to dividend investing is because of the recurring nature and predictability of it, and how I'm able to keep track of the progress in a spreadsheet format to work towards my goals. By monitoring the performance of the holdings, evaluating them, and understanding them better as a whole, you can also gain confidence and conviction in the strategies that work best for you and can have peace of mind with your investments. It'll also come with a Discord community where we can share ideas and where I can engage in conversations more directly with everyone. My goal with these spreadsheets and YouTube channel in general is to make sure I can do everything I can to ensure your success and to help those who are interested in dividend investing to get started. So I want to thank everyone for the support so far as I figure out this YouTube journey and hope that you can continue to find value in these videos. And with that, I'll see you in the next video.